question often comes up on a purchase transaction, how the money is going to flow and when the borrower needs to write various checks along the way. The typical situation, at least with our borrowers, is that there will be a little bit of money required up front as we do the pre-qual for a credit report. Charge today is $40. Whenever they get a contract on the property, the real estate agents will typically need an earnest money check to bind the contract. After there's a contract on the property, the buyer will typically order a property inspection. The inspector will go through the property to make sure there are not structural problems with the property or other undisclosed items, and make sure that the property is solid. That will have to be paid for by the borrower at the time of the inspection. We then order the appraisal. The appraisal is for the bank to determine that the property value is there, and the borrower will pay for that appraisal, typically with a credit card, and it'll be billed directly to the borrower. Neither the borrower nor the loan officer can select the appraiser anymore. Effective May 1st of 2009, the appraisal independence requirements were implemented, and the appraisal process, the appraiser has to be chosen through a process that is independent of either the borrower or the loan originator. The next chunk of money comes at closing, and at closing they will get an amount for the down payment and the remaining closing costs. They will get credit for the money that they've paid before for the credit report. The earnest money will show up at closing. The appraisal charges will show up at closing as previously paid items, and then they'll have to make up the difference at closing with the down payment and closing cost money at that point. And it will vary, but typically they will get that final number either the day before closing or the day of closing. They will need a cashier's check or a wire transfer to the title company to close that transaction. And that's the process that we go through as far as when the money flow comes out.